Hey, you are listening to Casas and Conversations with Darien Cruz. Thanks for tuning in to the second episode of the podcast. We've got a great guest on today, Jared Williamson with Movement Mortgage. Jared's a mortgage loan pro, so he's going to be able to answer a lot of questions that really I wouldn't be able to answer in the type of depth that he can. And that's what we want. We want to be able to give you answers to those questions and informed answers. So let's go ahead and bring Jared in. He'll tell you a little bit about himself, and we'll get right into it. Hey, welcome, Jared.
Hey, thanks for having me.
Absolutely, man. Thanks for coming on. I appreciate it. So I kind of let everybody know a little bit about you. You're a mortgage loan officer. Tell us a little bit how you got into that and where you're at now.
Okay. Well, I started back 2004. So about 16 years ago. I was with a Pedorthic shoe company out of Charlottesville, Virginia. Studying economics at NC State, I learned that it was more economical to go into sales and do shoes than it was to follow the economics degree that I was studying. So a little bit of Al Bundy, a little bit of Doogie Howser, mixed into one. So a lot of old folks shoes, and got to learn a lot. Got certified Pedorthist, and just got to meet a lot of people. So I had a good time. And one of my best buddies that I worked with, his wife was a processor for Countrywide, and he was like, "With your background, you should look into mortgage. You'd love the economic side of it." And I tried it. I took a shot at it, and here I am. 16 years later, loving it.
Oh, that's awesome.
Yeah.
I didn't know we were going to get into feeding today. That's fun. We're going all kinds of stuff.
You never know where it's going to take you.
So you didn't go full on into podiatry. You decided to go a whole different route after that and get into mortgages. But you had that finance background, so that's probably a huge plus, right?
Yeah.
Awesome. Well, I'm glad you did, because it's helping me out with the guests today. So that's awesome.
I'm here for you.
Appreciate it, man. Yeah, well, we had kind of talked about explaining some of the different types of loans and products that are out there. Even as a realtor, I would have more exposure to them than the average home buyer would. But even I, and any realtor, we're not really going to know the ins and outs of these programs the way you guys do. So it's awesome to have you on to be able to explain it to us. So let's talk about some of the different types of loans that we hear a lot about, maybe VA, FHA, USDA, if you can touch on those.
Yeah, a lot of those loans are going to be your low down payment. We refer to them as your government-backed, government-insured loans. You've got FHA, for starters, is going to be a 3.5% down. Very forgiving with credit. So if you're someone who's got a little bit of a ding on your credit, it's okay. Not to worry. We've got a loan program for you there.
Awesome.
With that, you've got your conventional loans, which we typically refer to as, most people consider having to have 20% down. You don't have to have 20% down for those. We can do those as little as 3% for a first-time home buyer.
Great.
We also have your USDA loans. Now, USDA gets you into a situation where it's referred to as a rural loan. It doesn't have to be out in the country. It doesn't have to be in the sticks. It just has to be in a designated area. Can't be in the middle of the city. So,
gotcha.
From there, it is income specific. So you can't make too much for a USDA loan.
Yeah.
And with that, you can't have too much of a down payment, because the goal is to help someone who needs that assistance.
Sure. Let me ask you this. If someone's looking at a particular home, how would they know whether or not that home's going to qualify for USDA?
There are tools for looking it up online, but I say first and foremost, have your relationship with your loan officer. And the easiest thing is to just pick up the phone and bug us. That's the easiest thing. Just that way you don't make a mistake. We're here to help you. Our goal is to help you get into the house that fits you, your lifestyle, your family, and it's just the home of your dreams.
Awesome. Perfect. Go ahead. I'm sorry. Yeah. Continue.
And we've also got the VA loan. The VA loan is probably one of my favorite loans. It's a 0% down. So you've got 100%. It is, if you're a veteran, whether it's active or previous. Now, and we can actually use a VA loan on with a spouse of a veteran that has passed, served, our country and everything.
Yeah.
And with that, it's got no monthly mortgage insurance. It does have an upfront funding fee, but that funding fee, if there's a lot of times our veterans, they have a particular, I don't want to say disability that they have, but they've served, they're banged up, they're bruised, they may have some issues, whether it's broken wrist that's messed up real bad, or some hearing damage or stuff like that. If they receive any type of compensation through the VA, or they're classified a certain percentage, a lot of times that funding fee up front is waived. So 100%
Wow.
financing, great rates, and very forgiving of credit. Our goal on a VA loan is to try to provide a benefit for our veterans that served our country.
Gotcha. And a quick question for you. There's something that's kind of come up a lot in terms of, where there might be some additional assistance and what have you. You mentioned injuries, maybe possible past injuries while someone was serving in the military. Are there any programs available for those that may have suffered or may still be suffering from like PTSD, for example?
There's a lot of different programs. A lot of that's going to be military based.
Gotcha.
Not so much on the loan side.
Okay.
On the loan side, it's going to be, if they've got that PTSD, then they're looking at receiving, a certain classification that they would have that funding fee waived.
Gotcha.
So,
okay.
Yeah.
Awesome. Yeah.
Now, there are other loans that do have down payment assistance. There are some city grants, some state grant programs. There's a lot of different loan programs. So first thing you need to do is just find that trusted loan officer and get in touch with them. Let them know what your situation is, and let them help guide and direct you to the right loan product for you and your family.
Yeah. And, on our side of things too, from the realtor standpoint, when I have a client, the first thing is I want them to get set up with their lender, make sure they're pre-qualified, pre-approved, that we know what they're going to be able to apply for. And we're going to get into some of that terminology as well as the difference between being pre-qualified and pre-approved in a minute. But I had a question about fixed mortgage loans versus an adjustable ARM. Can you kind of explain to people what those terms mean?
Yeah, so a lot of times we hear fixed versus ARM. And ARM just means adjustable rate mortgage. So fixed rate mortgage is just that. Over the life of the loan, it is fixed. Whatever rate you lock in at and close at, that rate will never change. So you've got 30-year loan, it's 360 payments of the same principal and interest.
Awesome.
Adjustable rate mortgage does have the ability to change. A lot of times what we do these days are called hybrid adjustable rate mortgages. So it's fixed for 3 years, and then it can adjust every year after, or it's fixed for 5 or 7 or 10 or whatnot. But it gives you the ability to have that stability up front and then sort of go into an adjustment down the road. And it's not for everybody. And a lot of times people say, as low as rates are today, why even mess with an adjustable when you can get a fixed rate? We're looking at low 3s, even high 2s these days with a fixed rate loan. And that's just unheard of.
Yeah, it's unbelievable. There's some incredible rates out there. Even as things have changed a little bit, with I imagine things have gotten a little more strict recently with some of the changes, the effects of COVID-19. But even then, there's still some amazing rates out there. It's pretty incredible. One thing we've seen too is how steady home prices have been. I mean, it's pretty surprising. It hasn't been this huge dip. There's certainly less homes on the market. That's something we're seeing. In terms of the supply, what's out there, the inventory, that's a little bit less, but the values have actually held, pretty steady, especially in our area.
Our area is very, I don't want to say protected, but we've got all the universities, we've got the military not too far away, we've got all the hospitals, we've got the Research Triangle Park, we've got a lot that protects us from a lot of these. We're not recession proof, but
of course,
we are a little more protected here than other places in the nation. So it's a great area, and people don't necessarily want a lot of people visiting their house right now. And some people are okay with it. But we're seeing lots of sales currently going on. So
and we're taking precautionary measures on the realtor side of things too, to try and do things as safely as possible, obviously, and respect whatever the homeowner's wishes may be. Obviously, it's a little bit easier if it's a vacant home, but a lot of these homes, people are still living in them. You got to be considerate of that. So we're really taking all the precautions that we can to do things as safely as possible. Another question that we were discussing, these different types of loans. If someone's coming into you, maybe they may even be buying a home for the first time. How do you help them choose the correct product to meet their needs?
So a lot of people think that there's a right way, or you go get a mortgage, and I don't want to treat it like fast food. You say, hey, I want a mortgage. I want the lowest rate. This is what I want. And you get in line, you place your order, they give it to you. A lot of what we do is we focus on education, because what's the best loan for you is not always the best loan for me. And what seems to be the best on paper may not fit your family situation. That's how adjustable rate mortgages come to play. Why would anybody mess with an adjustable rate mortgage? Well, I'm in a profession where I know 5 years from now, I'm moving. I will not be here 6 years from now.
Yeah.
So take advantage of a little bit of savings, even though there's technically higher risk later. That risk really doesn't fit into you. So with the first-time home buyer, it all comes down to education. Let's look at the big picture. Let's look at all of your finances and figure out what's going to be best for you as far as your budget, as far as what you feel comfortable with coming out of pocket at closing. There's just so much to take into consideration. It's an individual. There's no one size fits all.
Sure. I like something that you touched on there too. It's not just finding the right product for you as an individual, but finding the right product for you right now. It may be that right now, this is what fits. And it could be that 2, 3, 4, 5 years down the line, you might be in a position to look at something else, which I guess we can get into refinancing and that sort of thing in a little bit. But, it could be advantageous for you to go ahead and make that commitment, getting into the mortgage right now, and then looking down the road to see what has changed on the landscape at that point, right?
Yeah, absolutely. Taking advantage of home ownership, whether it has something to do with tax deductions, tax breaks, which, I'm always going to say, speak with your accountant. Things change. That's way out of my league. But, there are things taken into consideration with that. There's also the fact that you're not paying rent to someone else. You're building equity into your own house.
Yeah.
And appreciation. Our area is great. We seem to have a pretty consistent and steady appreciation over time. So
Gotcha, yeah.
you can build wealth while you're finding a place that's nicer to live in than what your apartment living probably is.
Awesome. We were talking about qualifying. What's the difference between someone being pre-qualified versus pre-approved for a mortgage loan?
Well, that can really vary company to company, state to state. The definition of pre-qualification, truly just pre-qualification, is you tell me some information and I say, based on that, you should be good. Doesn't always require pulling a credit report, which I have a lot of folks say, I don't want you to pull my credit because I'm afraid it may impact my credit. You don't know what you qualify for, or what your rates are going to be, or what program you're going to be in until we know where your whole picture is. That's sort of like saying, hey, I'd like to buy a house, but I don't know where I want to live. Can you get me a house? No, I don't really know exactly what it is that you want. But the goal is find that trusted professional and let them help you. A lot of times, especially nowadays, which I don't know, you've probably heard, a lot of people have these small collections. A lot of times it'll be a dentist bill that, you had a $14 copay additional that somehow it missed, or the chiropractor, or you left the cable bill, when you cut the cable, the remote, they didn't find the remote and they charge you $25 for it, and then you didn't.
For sure.
A lot of these things we can see ahead of time, and instead of you being last minute, hey, I've got to buy, I'm under contract, and I'm closing in 30 days. And I come in and I say, well, your rate's not quite where we'd like it to be. And it's going to impact you on your rate for the life of the loan. Give me a chance. Give me 30, 60, 90 days ahead of time to take a look at your credit and say, hey, you know what, if we tweak this, you could possibly have a little bit better credit and get a little bit better pricing.
And that's a
there are
super
tools
good
that
point.
we use.
Yeah, that's great. I like the idea of having, people speak to a lender as soon as possible. And I'll talk to people that are telling me they're thinking about moving in another 6 months, 7 months. Talk to a lender now. Let's see what your situation is now, because you have time to improve that between now and when you're actually going to commit to that mortgage. And, I've had clients I work with that maybe weren't in a position quite yet to get the type of loan that they want to get. And actually, you've helped some of my clients specifically and kind of gave them some tips. Look, right now it's not what you want. Work on this item, and this thing. Let's see where we're at, in the summer.
Yeah.
And I recently spoke to one of my clients that I worked with, who's a friend of mine, and they're working on those areas to
Hmm.
improve, and it looks like things are going in the right direction to where they will be in a better position to get the
Yeah.
type of home they want and qualify for the type of rate they want.
Hmm. Yeah.
Um, go ahead. Yeah, I'm sorry.
Oh, and that's one of the things, we can help you work on credit. We can help you work on debt. This is, I think you've heard the statistic, a lot of people buy a house 3 times in their lifetime,
Yes. Yep. I use that all
and
the time.
okay. Yeah. So,
Yeah, it's a great
and
one.
it's one of those things, I can help 3 new people a day.
Hmm.
I'm going to run through this a lot more than your average person.
For sure.
So I see things on a consistent basis that they don't even know to ask or know to check. So the goal is to help them. Hey, if we paid off some of this debt and didn't put as much down payment, you can qualify for much more with
Hmm.
better cash flow. And they're
Yeah.
like, but that doesn't make sense.
Yeah.
Or we can do loans where you have a slightly higher rate, but you don't pay mortgage insurance. And they say,
Hmm.
well, higher rate is bad. Not necessarily. We look for a low rate because what we're looking for is a low payment so that we have better cash flow.
Perfect.
And the lowest rate doesn't always mean the best cash flow.
Yeah.
Sometimes we structure things to give it better cash flow, and that's all you care about. It's cash flow.
Hmm.
Find the best rate for you today.
Yep. And that stat that you mentioned is fantastic, because it is true. The average person, 3 homes, that's probably what
Mm-hmm.
they'll purchase in their lifetime. A lot of people less than that. And the thing is, even any realtor they talk to, honestly, even probably the worst realtor will have tons more experience
Yeah.
than a realtor on its first day out of getting his license will
Mm-hmm.
have more understanding of how the process works than the average home buyer will. And that's
Yeah.
really something to keep in mind. And obviously, their mortgage lender is going to know so much more about the
A
process,
ton.
and you need that guidance. So, with that in mind,
Yeah.
actually, I have another the process. I have this other image here that we went over the first one already, but I wanted to
Yeah.
share this one, and maybe you can walk us through this a little bit to see what buyers can
Yeah.
expect.
So this is something that our company is specifically built around.
Hmm.
We refer to our process as the 671.
Hmm.
So our goal is to set expectations up front, collect all the information, get you in the right program, and take an application.
Hmm.
Once we take that application, we're going to go ahead and get it in towards underwriting. It's going to get assigned to an underwriter, a pre-closer, processor, a loan officer assistant. We're going to take that loan and we're going to split it into different layers so that we can work different pieces all at one time. And our goal is, from the time we turn that loan in, a complete application with all your documentation, your contract and everything, our goal is to have that underwritten and approved within 6 hours. So that can be
Wow.
same day. You turn something in, 9 o'clock in the morning. The
Hmm.
goal is to have it back 3 o'clock in the afternoon. And a lot
Awesome.
of times we're fitting in that 5 to 6 hours. Occasionally, our company's slow. We're 8 hours, 10 hours. That's also known as next day. That's one of the things that puts us way ahead of a lot of other companies. It gives us the opportunity and the ability to catch anything that may be a speed bump. I don't like to say a problem, a speed
Hmm.
bump.
Sure.
The goal is, you and I both know that every single transaction has something, if
Hmm.
not multiple somethings, that pop up. And our goal is
Yeah.
you and I protect our clients from really having to
Hmm.
see all that stuff. So while we stress out and we're worrying about things, the client just sees everything's going along nice and smooth.
Yeah.
So that's our goal. So,
Yeah, for
um,
sure.
so 6 hours of underwriting. And then from there, our goal is within 7 business days to get that processed. And that means that any additional supporting documentation that the underwriter needs to see to give a full approval, we work on that. And our goal is to make sure all that's done within 7 days. And then from there, we like to give our closing departments a day to work with the attorneys. And then from there, we're ready to close. So it's not
Awesome.
uncommon for us to be able to 10 to 14 days, be able to close something. A lot of times here in North Carolina, we've got built into the contract of 14 days if something happens on the original close date.
Yeah.
We rescue a lot of loans
Yeah.
based on that. So,
That's awesome.
but yeah, it's a great way to do it. And the goal is, from the time the client comes in, it's going to go to an underwriter. We're going to order appraisals. It's going to be reviewed. They're going to ask. Underwriting always asks for
Hmm.
something.
Yeah.
If they don't ask for anything, they're not really doing a great job. They'll ask you
Sure.
for something, even if it's piddly and the client never sees it. They'll
I
ask
get
us
it.
for something for fun.
Well, I'm married to an underwriter, so that's what my wife
Yeah.
does. She's an equity line underwriter, but
Okay.
it's true. They're constantly, they have to look at everything. I mean, just from secondhand, what I hear from her, it sounds like it's a pretty intense, thorough job that they do. And that's good. It's a protection. They have to.
That's it. A protection.
Yeah.
It protects everybody.
Yeah.
I can't borrow money if there's not a standard of what I can and can't borrow on what terms and what guidelines if somebody else isn't doing it. That's what got us in the mess a long time ago.
Yeah, that 2007, 2008, 2009, you're not doing anybody favors by, writing loans if you don't qualify truly for those loans.
Absolutely.
To the buyer either. That's not doing any favor to the buyer. Let's work and get yourself in a position where you truly qualify and you can handle the responsibility of that loan. And it's not even say that you're irresponsible. You need to be financially positioned to be able to handle that obligation. So that's, they're doing everybody a favor.
Yeah, absolutely.
And you have peace of mind when you know it's gone through that level of inspection and you qualified. Okay, well, I can do this. I'm good. I'm in a good position to handle it. And that's what you want. And that turnaround time is great, by the way. That 15-day is unbelievable. I can't say for sure. I can attest to the fact that within a day, you've definitely gotten back to clients and let them know where they stand in terms of applying for loans, which is awesome. It's hard to get that kind of turnaround. So that's really fantastic.
And it helps if something pops up. There's always the possibility that something comes up. I've got a client right now that they owned a property with their father many years ago. They got foreclosed on. It was never on their credit. They didn't do a loan for the property, but dad bought the house, said, hey, you're my heir. I'm going to, will it to you anyway. So might as well be on title in case anything happens to me. So I was like, sure, why not?
Yeah.
It seems to make everything easier. And then, it became a situation where the dad couldn't handle it anymore. The dad foreclosed on it. And now the son has a foreclosure that doesn't show up on his credit, does not impact his credit one bit. But the way we look at it and the way Fannie Mae and Freddie Mac and everyone, as far as the entities that make the rules, that is a property that you own that got foreclosed upon. And now there's certain stipulations. With this situation, we were fine. It was far enough back that we were able to go through it, but it didn't show up on the credit. The customer didn't think about it because I've not paid any attention to that for, I haven't seen that house in a decade.
Wow.
But it's something that, it gets found. So don't try to hide stuff from underwriters either.
They'll find it. Yeah. Yeah.
It's not worth anything.
I couldn't hide stuff from my wife as a wife or as an underwriter. It doesn't matter. She's going to find it. It's, it's an inherent skill they have.
Yes, they do.
In fairness, she's also my producer for this podcast. She's the one that's trying to make it look respectable.
She's doing a great job.
Talents all around. I'm fortunate. We have her camera equipment. She was a photographer as well. So, without her, it's looked like the first episode I did, which looks like I filmed it with a toaster. So this is a lot better. But clearly we're moving up in the world. We're trying to make it look a little better. And, for people that are interested, that are listening to, that are just into podcasts or video production in general, we lucked out, man. Canon just released this plugin to finally allow us to use these DSLR cameras as webcams, and it's making a huge difference. It was a little touch and go this afternoon. I know we were on a Zoom call. I thought the whole thing was going to blow up, but finally it looks like everything's working.
Oh yeah, it's much easier this time.
Yeah, appreciate it. For everybody listening, inside knowledge, behind the scenes, this is our second taping of this podcast today. Third attempt, second actual taping of the podcast. Yeah. So things are getting a little smoother. Thankfully, Jared's a good pal, so he's let me test everything out on him and put him through the ringer so that the other guests will have it nice and easy in the future.
I'm looking forward to seeing episode 1036 and see how far it's gone and what the production studio looks like. And
for sure. We'll see what happens.
East Coast. We'll see.
You never know, man. You never know. We're hoping to expand it. Hopefully we'll get some new listeners. This is great information. This is exactly, I think, what we need, is to have people like you on that are knowledgeable. Give people, really in-depth look into what the process is like. So I appreciate it. Thank you for coming on. I'll let you go. This guy's about to go run 2.5 miles, which is insane.
You want
to tell him about your challenge?
So my boss, I don't know exactly how it happened, but we were talking about how running helps you feel a little bit better,
Mm-hmm.
and you can get a lot of stuff out. And I was like, yeah, I used to run back in the day and everything.
Yeah.
And he's like, okay, good. I challenge you to run a certain amount during the month of May. And I'm like, okay, sure. I let the first 10 days go, and then I ran a little bit, and I've
Yeah.
gotten way behind. So
Wow.
I've got to run tonight, tomorrow, and Sunday night to meet my goal. But
You'll get it. You'll get it. That's awesome.
he's challenged me. I'm in it, and I feel much better. I've gotten significantly better. He actually sent me a message earlier saying, hey, you've gotten significantly better. So
that's good.
The goal is if I can get better at mortgage like I am at running right now, which I started low. So.
Yeah. Dude, I couldn't run to the mailbox if I had a gun in my head. So good for you, man. I'm happy. Good.
Okay.
That's awesome. I got to work up to that. I'm going to start brisk walking. We'll make it happen. Well, thanks for coming on. I appreciate it. And we'll go ahead and let Jared go. And we'll go ahead and wrap things up. Thanks a lot, Jared.
You're welcome. Thank you. Looking forward to it. Bye.
Take it easy. Mm-hmm.
Bye.
All right, everybody. That was Jared Williamson from Movement Mortgage. He is one of the preferred lenders that I work with. I have some other lenders as well that will be on future episodes. We're going to have some realtors come in who have some really great experience and knowledge they can share with us. And we're going to go into different areas as well of real estate. I mainly specialize in residential, but we're going to bring in some commercial realtors as well as some on-site realtors. It's a whole different experience. I mean, these are different areas. So for our listeners who are buyers, sellers, renters, business owners, and even those interested in getting into the industry themselves or currently realtors, there's going to be something for everybody. So definitely tune in, keep listening. Please, if you're watching on YouTube, we're going to be loading up the podcast on there as well. We'll upload it to YouTube. Like and subscribe below. If you are listening on Spotify, iTunes, or wherever else you listen to podcasts, we're streaming everywhere. Please go ahead and subscribe to the podcast. And if possible, leave comments and reviews. We got to get those algorithms going so that we're showing higher up in the list and getting as many listeners as possible. It's really valuable information, and we appreciate it. Want to thank Angie, my producer over here, who's trying to make this thing look good. If you're watching on YouTube, if you're listening, hopefully it actually sounds a little better too. Thanks a lot for all your help and all your support. And we'll see you next time on Casas and Conversations with Darien Cruz.